The EU Wednesday announced retaliatory duties impacting $28 billion in U.S. goods. The measures unveiled just hours after the U.S.'s 25% tariffs on all steel and aluminum imports went into effect. President Trump defended his tariff policies in a meeting with business leaders Tuesday afternoon.
The tariffs are having a tremendously positive impact. They will have, and they are having. And ultimately, the biggest win is not the tariff. That's a big win. That's a lot of money. But the biggest win is if they move into our country and produce jobs. That's a bigger win than the tariffs themselves.
With us now to discuss, we've got Rob Casey, Signum Global Advisors partner and senior analyst here. Rob, just want to go back to what we just heard in that clip here. What is the overall kind of relationship and the reaction that we're seeing between Trump's defense of tariffs versus what CEOs are navigating right now?
Yeah, well, I think you just heard it from Keith in the last clip. And first of all, Brett, it's great to be with you. CEOs today are navigating uncertainty. And as much as President Trump would like to, convince us all of a longer term story of strengthening the U.S. economy, in particular, strengthening U.S. manufacturing, in the short term, right, we are uncertain as to what the market is going to look like. There are certainly, calls for a recession now that there weren't maybe a month or two ago. And so I do think President Trump is trying to sell a long-term story. The rest of us are trying to stay above water in the short term.
And this also comes after we heard from Goldman Sachs CEO David Solomon this morning reiterating this idea that CEOs do want clarity on policy from the White House and that would allow for more capital investment and more growth. I wonder then, Rob, based on your sourcing, your conversations in D.C. with folks, what might push the Trump administration to capitulate to some of these executives and provide a little bit of that clarity? Would anything?
Well, there's been a lot of conversation about where the Trump put is, right? How much pain is the Trump administration willing to take in the markets to reverse course? We're certainly not there yet, right? Maybe it's a 10 or 15% correction, and we're getting there. But honestly, I think that the more important reaction function that we have to think about in the short term is not an economic one, it's a political one. And that's Republicans in Congress going to the president and saying, listen, you don't have to run for re-election again in 4 years, but we do, right? And many of us, everybody in the House has to run again in less than 2 years. So if we're thinking about what is going to force President Trump to either reverse course on some of the tariffs that he's already implemented, although he hasn't implemented all that many so far, or at least provide some clear certainty over the medium term. Right. I think it's going to be that political reaction function of Speaker Johnson, Majority Leader John Thune in the Senate, saying, listen, President Trump, we understand what you're trying to do. We also want to rebuild manufacturing in the U.S., but you have to give us a chance in the midterms.
But does Trump by his own admission doesn't care what the market is doing. He's not watching it. And then even for these politicians that you mentioned, the majority of their constituents are not even invested. So is that going to actually motivate them to go to the president and try to move the needle on these policies?
Well, it's it's true that the majority of constituents aren't looking at the markets quite as closely as we are, right? But if we're thinking about agricultural states, in particular, if we're thinking about farmers, they are represented by Republicans. The middle of this country is driven by agriculture. The middle of this country also votes for Republicans. So as we're talking about reciprocal or responsive tariffs coming from the EU, coming from China, potentially coming from Canada and Mexico, I do think that even if constituents are looking at markets, they're looking at their day-to-day operations. The tariffs are something, not only are they hitting Wall Street, they're hitting Main Streets and they're hitting farmers. And so everybody's worried about the impact of these tariffs.
And so one of the other things that we kind of think back to Trump 1.0 with is the U.S. and China's negotiations that ultimately netted out a deal, but then we had COVID, so following through on some of those elements became a little bit harder, and some of the tariffs ultimately were not kind of re-engaged with by the Biden administration. So now you have a lot of companies that have tried to figure out ways just to continue to operate, either continuing to have their own agreements with China or making sure that they can circumvent any potential risk there. How is that standing right now, especially knowing the outsized risk that some U.S. companies have to their revenue if we do see a ratcheting higher of those tensions between the U.S. and China?
Yeah, so honestly, at Signum, and our coverage of tariffs is led by our head of research, Andrew Bishop. We are very rarely accused of being bullish, right? I mean, if you look at the world of geopolitical risk and uncertainty, there's certainly a lot to worry about. We're very worried about U.S. Europe in particular. Where we're not quite as worried is in U.S. China, and I say that for a couple of reasons. Obviously, we've seen 10% tariff applied, and then another 10% tariff applied, getting us to a 20% tariff increase over the course of the Trump administration so far. But what we haven't seen is significant retaliation from China. We've seen tit for tat, but nothing that sort of looks like a U.S.-China trade war in the short term, and we think that is essentially intentional, that neither President Trump nor Xi want to, go down this path of trade war, and rather both are willing to, or potentially eager to, sit down and have a discussion. Right? We saw this in Trump 1.0, given the U.S.-China trade deal 1. It's true that given COVID and after Trump left office, China did not hold up their end of the bargain, especially in terms of purchasing U.S. goods. But as a matter of fact, we think Trump is eager to, get back to the negotiating table with Xi. And that's why, at least in the short term, and, rhetorically speaking, we're seeing Trump go after American allies much more significantly than he is going after China. Now, what that looks like in the long term, we think essentially it is a relatively muted trade relationship over the course of the short term, right? Not a significant trade war. And then over the course of the long term, right? The entire Trump administration, 4 years, what we think is we see very well telegraphed, choreographed, and quite high phased in tariffs, but only on key sectors focused on economic security and defensive security. So, pharma, PPE, right, tech, semiconductors, some of the defense supplies we import from China as well. Those sectors are going to get hit hard by tariffs. But it's a story about strategic decoupling. It's not a story about broad decoupling or trade war.
All right, Rob, really great overview there. Thanks so much for making time for us this morning.